Okay, everyone, welcome to our Housing for All weekly series. I'm so excited today because today we are going to be specifically talking about entrepreneurship in real estate with my girls, Miriam and Caro. So I'm going to have them sort of introduce themselves and then we'll talk a little bit. We'll go a little personal actually first because I'm going to always center things on the why. And then we'll get to the resources that can help our small business owners and our entrepreneurs ensure that they get their housing and their real estate investment and why this is so important. Yeah, I gotta love technology. I gotta love my entrepreneurs. We are always here on it, working and doing all kinds of things. This is what happens when you're an entrepreneur. You've got multiple things going on, so no worries there. We all know the life, so I appreciate that. Why don't I start with Miriam? Actually, Miriam, can you talk? Okay, so I'll start with Miriam.
Sorry about that. The call from my cell came onto my laptop. And I didn't think you guys could hear it, but I guess you could. So hello, everyone. Thanks for joining today. I hope that you'll find some useful information. And thanks, Kumar, for putting this event together. I've been a full-time entrepreneur since 2017. And the year before I decided to not work in the corporate world anymore, I bought 2 houses. And I've been doing real estate since then. So I'm excited to share what I've learned along the way and just be here with you all.
Awesome. And then Caro?
Hi, my name is Carolina. I am a licensed real estate agent and a licensed mortgage loan originator. So I work with both real estate and mortgages, predominantly mortgages. I've been in the real estate side for I'm about to turn 11 years in the real estate business. So I've worked with a little bit of everything from foreclosed homes to title companies, real estate investments, fixing and flipping, mortgages, now traditional real estate, you name it. I've probably dabbled a little bit in it.
Love that. Thank you guys both so much for that introduction. One of the things that I've learned, I mean, Miriam, we talked about this last week, and then when I was reading your bio, Caro, I didn't realize that both of you all have had some housing crises when you were younger that sort of really steeped you on the importance of having stable, secure, and safe housing. So we'd love to just talk a little bit about that sort of traumatic time in your stories, in your life stories, and then how do we get to the place where you are now, where you're so passionate about the work you're doing as it relates to real estate. And Carol, I'll start with you, and then we'll go to Miriam.
Yeah. So after the mortgage crisis in 2008, my family home was the only home that I had known growing up. We lost it to foreclosure in about 2011, 2012, around there. And during that time, an investor actually purchased that house from the bank. And I would pass it all the time because from there, we moved to my grandmother's house, which was a couple of blocks away. So we were always driving by. And I noticed that an investor purchased the house that I had grown up in. And this house throughout my life was always under construction. So I never really got to see it finished. There was always a portion that was being worked on. And seeing this investor coming in, remodeling the whole house, and then selling it kind of like piqued my interest of real estate investments, and also basically like wanting to help others avoid what basically we went through. So I knew I had to get into the real estate business as some way, somehow. And I got my foot in the door working for an asset management firm, which would manage foreclosed houses. And from there, moved on to the next role. And that's basically what motivated me to get into real estate.
Miriam?
Well, my journey was a little different, but also came through an event that happened in my life. When I was growing up, we talked about this on the last call, Kumara. I was homeless a few times, and a lot of people probably didn't know that about me, but I'm totally open about it, and I share, talk about it freely. And I had this drive that I never wanted to be homeless again in my adult life. And so I knew I wanted to buy a home, and that's what basically motivated me to get started. And then once I was in it, and it was out of necessity that I turned to platforms like Airbnb and started renting out rooms and things. I just had no income coming in after I left my corporate job. So that's what kept me going in it. And since then, I've just seen that it's a really powerful way to have freedom in my life. I can do what I want because I have passive income coming in from my real estate. And so I just keep doing it.
I love that. I want to talk a little bit more, Miriam, if you don't mind, around what it's like to be unhoused. And the reason I want to go here is we know that the Supreme Court has really made it, has allowed states and counties and municipalities to put laws in effect that essentially allow for homelessness to be illegal. So like, how can you actually live and survive when all of these laws are in place that say you can't even figure out ways to like live in a tent or live out of your car? You constantly having to go and having to move. So I would love to just hear a little bit more about the personal component, the feelings that these kind of insecurities had when you were growing up as a child. I think we don't talk enough about the personalization of that. So if you don't mind, Miriam, I would love to just dig in just a little bit more there before we get into the investment piece of things.
Sure. I was homeless my first time being unhoused. So I guess the politically correct term at this point. When I was 12 years old, with two of my brothers and my mom, we had just moved from New Mexico to California. My mom was a single mom. We were on Section 8 welfare, and we packed up all of our stuff in a car and a U-Haul and towed it across the country to California in hopes, I think my mom wanted us to have a better life, more diversity around us. We were, biracial children. I was one of two girls at my school at that time that were Black. So there really wasn't a lot of diversity. And California obviously has a lot more and more opportunities. I'm sure my mom thought that would be better for us growing up. But for the move, we didn't have anywhere when we arrived. So we were sleeping in the car, and we had put all of our stuff into storage. And I just remember we stacked that thing so high. It was towering. Like I was like standing on boxes because I was little enough to not crush them. And I would push them up to the top, and it was stacked all the way to the top, all of our stuff. And then we slept in the car, and we would move around and stuff. And we were in a parking lot of a Rite Aid across the street from a print shop, and for a while. And the owner of the print shop came over, and he talked to my mom, and then he helped us. He got her some work. He let us do little jobs for him, like sweeping around the print shop. He ended up getting us into a home, and that was how we got out of that situation. And then as a typical teenager, me and my mom used to fight quite a bit. And she ended up kicking me out a few times. And so that was when I also experienced being unhoused as a teenager in high school. And that was embarrassing. I felt a lot of shame from that for sure. And scarcity, lack. I think that that is what drove me, not just the unhousedness situation, but just being in poverty in general and growing up having to always figure out how to make things happen really made me the perfect entrepreneur. Of course, once I realized that, I was like, well, that doesn't seem very healthy, but I was already too late into the game and had my businesses, so I just keep going with it. It's made me great at problem solving. It's made me great at thinking outside the box and just being able to figure things out. And also what it does is it makes me look for problems, because my comfort zone is having things really chaotic. So luckily, now that I'm aware, I've been able to kind of see, do I need to make this situation more complicated? Am I doing that because it feels uncomfortable because everything's going right? And that feels weird to me. So going through that's just been, a journey of growth.
I love that you talked about that, and sometimes feeling comfort in the chaos and the problems, in finding problems, creating problems, just so that you feel in your normal comfort zone. And I think, even though this is not where I was trying to go in this call, but there is something about being an entrepreneur or just a person in general, just doing these sorts of stop and reflecting around how our childhoods completely can inform the ways that we maneuver in our adult journey, whether it relates to relationships in general or to our career. So Carol, I want to swing to you. And obviously you talked about what happened in 2011, the foreclosure, and then you you feeling so passionate about helping people in the foreclosure space. Can you talk a little bit more about that? And then I'm going to dig in a little bit more too on the foreclosure and how do you do that in a way that feels respectful of people's situation, of their economic situation at the time.
Yeah, so when in 2017, I started working with a real estate investment firm that basically we would buy distressed homes, people that are at the risk of losing their homes, and we would offer to buy them cash and basically get them out of their hole, in foreclosure and prevent that process. So like if they were in a pre-foreclosure state, we would offer options such as short sale where you can negotiate with the bank and, basically settle for less and there's no foreclosure marked on your credit history. And oftentimes when we recommend short sale, at that time they were going through banks were negotiating and they were accepting lower prices. Now I'm not sure so much. Short sale might be a little bit more difficult now because the way the market is, it's much higher now. But back then in 2017 we were able to get a lot of individuals out of that hole. And then now as a mortgage loan originator, I just try to explain everything about the mortgage process and inform the buyers so that they know that they're making, the right decision for themselves and for their lives, making informed decisions, because a lot of times, real estate professionals, it's not that they're misinformed, but there's a lot of misinformation out there. And I feel like if you're a buyer buying a property, you need to know what you're getting into. So my role now as a real estate agent and as a mortgage loan originator is giving as much information as possible so that the buyer is making an informed decision.
So speaking of that, what are some misconceptions that you see all the time that you're sort of correcting with people that try to get financing?
You don't need 20% down to buy a home. That is the number one misconception, is that everybody thinks that you need 20% down to buy a home, and you don't. So as a first-time home buyer, you can buy as low as 3% conventional. People think 3.5% is the lowest, and it's actually not. It's 3% with conventional. But another misconception is that you need to have perfect credit, and that's not the case, because FHA, they allow as low as 580. So there's options out there, and people just think, oh, I need to have great credit, I need to have a lot of money in my bank account so I can do 20% down, and that's absolutely not the case.
I love that you bring up the FHA, because this part of this is also about educating folks around what are some of the government funding options that people have. And FHA is basically a government-backed, government-funded loan, which is why the credit can be so low, which is why the down payment can also be low. Are there any other sort of programs that you recommend in terms of maybe getting folks to help with their down payment or closing costs? We're in Florida, so if there's any particular things that help Floridians that you know of, I would love to hear some of those resources.
So there are a lot of down payment assistance programs. We just finished one called Hometown Heroes, where $100 million was approved in down payment assistance beginning July 1st. At the current moment, the funds have been depleted, but this is the third time around that they have done Hometown Heroes, and it's been so successful that we think it's going to keep going. It hasn't been approved yet, but also during this time, there's still Hometown Hero loans that are still in the process of closing, and if they don't close, they release those funds that were reserved for those individuals. So in the next couple months, they could release more funds. Hometown Heroes is a big one. It's basically for anybody that's a first-time home buyer, works full-time in the state of Florida for a Florida-based business, or even is self-employed. So if you have a business registered in the state of Florida and you're self-employed in the state of Florida, you qualify. And you have to have your credit score above 640. So that's the main one that's going on right now, but there's many others.
Awesome. So I put your website up because I'm figuring that you probably have some more additional information. So if you have any questions, thoughts, concerns, you can reach Carol here at her website. So now I want to swing to Miriam because Miriam, talking about thinking outside the box. I said this the last time we spoke. You got pre-approved. I can't recall all the numbers, but I think it was like $300,000. You got a pre-approval, and maybe you want to talk about that process so people understand what does it mean to get a pre-approval. And then instead of buying one property that sort of fit underneath there, you bought two properties. So can you just for anyone who might be new, who's just coming on, who's just learning about this story, can you just talk about that again and then talk about the little pre-approval process as well?
Yeah, and what Carolina has said in the beginning, what is very true. You want to make sure that you're understanding what is going on with your loan, because I was pre-approved for $320,000 and I knew I could not afford that mortgage payment. Where they're like, here, we'll give you this money. And I'm sitting here like, the math is not mathing on this. Right? And some people have a term, it's called house poor. It's when you buy a house that basically your mortgage payment, you can't afford anything else. You can't afford your car. You can't afford to get groceries. You can't afford to get public transportation, go places or nothing. Like, you're house poor. You got a house, but you can't even furnish the thing. Right. So you don't want to be house poor. And I'll say this again, like I said in the last one, this is not your dream home. You've got to go into buying this with a mindset that this is your first home, and then you're going to continue to purchase and work up from there. It's unrealistic at our age in this day and age to think, if you're in the same demographic as I am, that you're going to buy your dream home in your 20s or even maybe your 30s. That might come in your 50s, your 60s. Okay. And so my down payment, I did 3.5% down, and I was approved for up to $320,000. So after I bought my first home, which was only 70 something thousand or whatever, I had still approval for more. And so then I went and bought a second home that still I wasn't maxing out. I ended up spending like $280,000 total at the end of the day. So there was still room for me in my pre-approval that I could afford to live my life after that. Another program, this is the loan that I used for my most recent purchase, because as an entrepreneur, like Carolina said, there are options available to those that don't have W-2s. And, maybe our tax returns aren't really showing that we're making a ton of money, because as a business owner, you're taking a lot of losses every year, and you're counting that back on your account. Is working to make sure you're taking every single thing that you can away from your tax payment. So the DSCR loan, you do have to have a down payment for, but I ended up using one of those loans. It doesn't require any W-2s or your tax returns. They do a credit check, and then you have to have a certain number of money in the bank for 6 months to cover the mortgage payment. But as long as the rental income covers the mortgage payment, you can get approved for that kind of loan. And there was another loan that my mortgage broker offered to me too that was similar. I don't remember what it was because I didn't end up going with it, but there are options out there. And as an investor now, what I did with this loan is I did interest only for the first 10 years, because my main purpose for this house is to cash flow. So when in the first 10 years, when you're doing an interest only loan, your payment is lower. It's several $100s lower, which means that several $100s is going into my pocket. Now I'm not paying down the principal of the loan, but why would I really care about that? Because in 10 years, that house should be going up in value. And so even if I sell it, I'll just pay off the loan and I'm moving on to the next property. So you have to think about it like that too. Like, what is your purpose? Are you buying this house to live in it? Are you going to rent it out? Do you want it to cash flow? And ask for all the options and read all the documentation. A lot of times people just trust the professionals that they're working with. I can't tell you how many times I've read through documents and I've said, that's not correct. Or I've read something I don't understand, and then I ask about it and it changes the whole direction of the process. So take the time to read the documents that they provide you and become educated on what exactly you're agreeing to.
Great. Thank you so much, Miriam. That's super helpful. And I will go ahead and do some research on the DSCR loan so I can give you guys a link to it in our show notes later. But Carol, one of the things that it was your story, I think it was a story or a post that you had on Instagram, and you were basically saying if you're behind in your SBA loan as an entrepreneur, you may or may not get approved for your home loan, which, okay, first of all, blew my mind. And then when you and I started talking, I realized that you had a specialty and a passion for helping entrepreneurs get their homes and get into real estate. So you can talk a little bit around how do you help entrepreneurs do that? If you have any other loan programs that you want to highlight or resources, and then what tips do you have for entrepreneurs as they're thinking about getting into real estate?
Awesome question. So it's actually my favorite question. So just to touch base on the story post that you saw. So I am going through a specific, a client of mine, entrepreneur, has owned his business for 10 years, ended up getting an SBA loan. And there's a lot of misinformation or misunderstanding with SBA loan, thinking that it's forgivable or you're not sure it's due yet. This, kind of misunderstanding happens. And he didn't know that he was past due on his SBA loan. And we are doing an FHA loan. So since FHA is a government insured loan and SBA is also a government loan, we have to do this search called the Cavier search. So if you are past due on any federal government debt, it'll come up on your Cavier search, whether it's student loans, SBA, any federal debt, it'll come out. And we can't close on this FHA loan until he brings his SBA up to date and clears his Caviers. So that's super important to know when it comes to FHA. But as an entrepreneur, self-employed, you have the capability to do, let's say, conventional, where if you've been self-employed for at least 5 years in the same line of business, you can show just 1 year tax return with conventional. You don't need to show 2 years. And a lot of people think, okay, I need to show 2 years tax returns, and the income that we count is your net income. This is after all of your deductions on your taxes. Let's be honest, a lot of entrepreneurs, we claim a lot of business expenses to try and bring down our taxes. It's just normal. So if you know that you want to buy, the next year, when you go to do your taxes, be mindful. And if you've been self-employed for 5 years, don't claim so many business expenses. Do, your legitimate expenses, and then we can only use 1 year tax return if you've been self-employed for 5 years. Another tip, super important, if you have a car, pay it from your business. Because if we show 12 months that your business is paying your car, especially if you're using your car for your business, if you're driving around, like that's a business expense. Pay it from your business. If we show 12-month statements that it's paid from your business, that debt doesn't count against you. It doesn't count against your debt to income ratio. It's saved so many of my loans. You have no idea. When it comes to the debt to income ratio. And then another tip is, let's say you want to buy this year, you can't wait till next year to file a better tax return. We have non-QM programs, which DSCR is one of them for investments. But let's say you want to buy primary, we could do a bank statement program where we don't show your taxes whatsoever. And we basically take a 12-month average of your business deposits, and that is the income that we use to help you qualify. And you don't need to show your tax returns with that bank program. So there's many tips. I can probably keep going. Same as like house hacking, like if you can buy a property as if it's your primary. Let's say you want to buy a duplex. The income from the second unit helps you qualify for your mortgage as well. So there's different tips, and tricks to getting into a home as an entrepreneur.
Love that. So I definitely want to talk about monetizing your homes and having rental income. But before we get there, because I'm in the middle of doing this now with one of my properties, is a cash out refi. Can you talk a little bit about cash out refi? And that's about having equity in your property and then leveraging that equity as a cash flow that you may invest back into your business or do XYZ. But most of the time, I usually invest it in another piece of property or into my business.
Yeah, so in the last couple of years, property values have gone up, and basically what a cash out refi is you are replacing you're replacing your current loan with a new loan, but also increasing that loan amount where you're tapping into your equity and taking money out. So that's a cash out refi. There's also a home equity line of credit where if you don't touch the first loan, you can get a second loan on your property. And basically with this loan, you can help, put it into your business if you want to expand, if you want to buy another property, which is a common thing, at least, with my clients here in South Florida. They're either putting it into their business or putting it into another property, basically into something that's going to make them, more money or, money in return.
Awesome. So want to swing to the idea, and Miriam, you and I, we definitely were like, yes, it's so true. Having real estate totally helped me in some of my low times when I didn't have the quite cash flow in my business, or, I've been pivoting, I'm doing different things. And that happens, when you're an entrepreneur, you've got great years, you've got great months, and then sometimes you've got some real lows, and being able to tap into your property as a way to get some passive income and some cash flow is super helpful, and also protects you as a business person and entrepreneur. So Miriam, I would love for you to talk a little bit about the work that you did with Airbnb, the investment properties that you have, rental income, and then of course, I know that you just sold one of your properties for a certain amount of money and then reinvested it back into property again. Yes, I think that's what you did.
Mm-hmm. Yep. And I'll be frank with everybody. I don't want people to think that it's passive income in a lot of ways, but it's still work. And there have been a lot of struggles with the housing. So the first house, we did Airbnb on that one. And there was a point in it where I didn't even have a car. Okay, let me tell you this. I was riding my bike. There was no laundry unit at that house either yet. And I was riding my bike from my house, which is like 13 blocks away, back and forth with doing the laundry at my house, riding the bike over there, getting the laundry in, carrying it on my back on my bike, going back to the house, washing it, bringing it back. I mean, every dollar that I made, I was working for it. I had to work for this money. Okay. And eventually we did get a laundry unit over there. And then there were some things that I also did. I got a house manager type person there that lived there and managed the Airbnb. Now Airbnb has Airbnb manager co-hosts where you give them a percentage of the Airbnb rentals and they do everything for you. So there's a lot of ways that you can not work as hard with Airbnb because it is a lot of work. People have a ton of questions. They're pinging you at all hours, especially if you're doing it in Miami. It's a travel destination for international. So I was getting messages all the time, responding to them, tour guiding, giving them recommendations. They expect so much. You're everything that hotel is. You're the concierge. You're the housekeeper. I will never not tip a housekeeper again. The things that I had to clean up from people is disgusting. Okay. So it's work. Eventually I was like, this is not the work that I want to be doing anymore. And then I went to having tenants. There's issues with that too. Then you got to start doing background checks. Everybody comes at you with a sob story. And I'm the type of person who cares. So people that's why you're doing this, Kumar, this housing campaign is because we have a housing crisis. Yep. And as a landlord, you're going to get those stories. People are having a hard time out there and your heart breaks for people. I have been taken advantage of. I've had to do an eviction. It was awful. People steal things. People break into your house, steal things. I had someone break into one of my houses on Sunday and steal the dryer, just the dryer. Like, how do you even get away with that? You're just grabbing it. I'm kind of like, whatever. I mean, you must have really needed it, like, to go to that extent. So I can't even be mad at, it's just, so things will go wrong is what I'm saying. And you want to have funds aside to handle that kind of stuff. One of the, a really great website that I recently have found is called Nomad. Nomad is a new property management website. So they can help you find tenants, and they will do all the background checks, and they'll list your house on all the different sites and everything like that. They'll have a portal for the tenants to log in, report issues. They'll refer out. They've got vendors that can come in, plumbers, your electricians, your handymen, to fix the things. Everything's sorted out through their payment. So it makes things very seamless. But the other great thing about them is that they guarantee your rent. So if your tenant stops paying your rent, Nomad pays your rent until they get a new tenant in there, and they'll handle the eviction process. They take way less than your traditional property managers, who normally would take 8 to 10% of the income, which is, you know, when you're looking at it, you're like, dang, that's kind of a lot, right?
Yeah.
So I really like Nomad. I highly recommend it. It's easy to use. The team over there is really amazing.
What's the actual website? How do I spell that? I can put it up here.
NOMAD. I think it's nomadlease.com.
Okay.
And you can go on there. You can find houses on there that use Nomad and apply for them. And then if you own properties, you can go ahead and put your property up on there. So I recommend them for sure.
Great. Okay. But besides all the trials, listen, I'm like, wait, besides all the trials and tribulations.
Yeah, I know you see me on my bike.
You still in the game. So like, what keeps you here? What keeps you here in the real estate? Why you find it to be important, et cetera?
It's profitable. It gives me a sense of security. It makes me feel safe that I always have a home, that I'll never be homeless again. I'll never be homeless again. Yeah. I've been able to help people in my family as well have homes when they didn't have homes. And it gives me freedom to do whatever I want to do, because I have that passive income. And if I wanted to, I could sell my house and go travel the world if I wanted to do that. And it just makes sense. And it's part of the game here in the United States of America. Property is one of the tickets. It's a ticket to entry. If you want to have that American dream, you got to start getting some property.
Yeah, I couldn't agree more. I mean, property is absolutely king. You can see the ways that the laws are written, the Constitution is written. It's all about land, property, ownership. And that's how you build your wealth. That's how you have your generational wealth being built. And so besides all of the trials and tribulations that can happen, and I'm happy to talk a little bit about my own story, but the income that comes in that can help you level out as an entrepreneur. But the other thing that we don't talk about, or we haven't really touched upon, is your property value adds to your net worth, which is also super important when you're thinking about ways that you can maneuver through the American society, especially. So I'm not going to ask people their net worth, but can you just talk a little bit about homeownership as a foundation for building generational wealth, building your sense of net worth? So Carol, you can talk about yourself, or you can talk about clients that you have as examples.
Well, I'm currently not a homeowner. I did used to own a property. I had to sell it for personal reasons, but I just feel like I have many clients that have purchased properties, and even though that's not their main line of business and they have them on Airbnbs and rentals, it's helped them, you know, save their businesses. It's helped them get out of debt. So it's helped them, you know, basically increase their net worth as far as, you know, once they pay down their mortgages and they have this equity that adds to their net worth, you know, and they have this safety net. But from personal experience, I currently do not own. I hope to own soon, but I have owned in the past.
Miriam, do you want to add on to that?
I don't have any children yet. I hope to have a family one day, but it absolutely, it's a moment to be proud of, to buy that home and to have that, and knowing there's been some in my family history, because, you know, my mom came from a white family. They were, you know, fine. They were, no, I wouldn't say they were well off, but they're fine. But when she decided to have children with a Black man, that she was basically exiled from her family. So we were cut off from all of that. We didn't grow up with any relationships to them. And so, except for on my grandfather's side. And so we were poor, and now my future generations will not be in that position. You know, we will have homes, and it's just nice to know that I have places, and I'm starting to get places in different states so that I can have homes in different places. I can travel, I can go on, you know, vacation homes. It feels good. I can say that it feels good. And I think everyone should do it, honestly. They should. And the other thing as an entrepreneur that you should think about is purchasing in the name of a business if you want to go that route, because there's a lot of benefits to doing that. I haven't done it myself yet, but I think that I'm getting closer to making that move, whether I have to form another company to purchase the homes under that. I think there's some additional tax benefits to doing it like that. And there's some additional rights as well, especially when you're starting to look at buying land. So when you're buying homes, that's one thing. But when you're buying land as a person, there's certain rules and laws and things that you have to abide by. But when you buy land as a company, that land becomes privately owned. It is privately owned by the company, and you can do what you want with it. Probably zoning, and still you have some constraints, but there are more flexibilities, I believe, especially when it comes to land.
I'm glad you brought that up, Miriam, around buying in an LLC or in a business name. Carol, I'm sure you have had clients who've done that. Can you talk a little bit about that process? And if you are a person who has, for whatever reason, purchased property in your name, how easy is it to switch the deed into a business name, if you know that information?
Okay, so for the first part of the question, as far as putting title under a company name, you unfortunately cannot do that with conventional or FHA loans. FHA is only primary. Conventional, you can buy investment, but you have to hold title under your personal name. To do under an entity, you can do a non-QM loan, like the bank statement loan and a DSCR loan that Miriam mentioned earlier. And the benefits to that is, I'm sure there's tax benefits to it, and also liability. Let's say you have, you rent it out in an Airbnb, somebody slips and falls, that it's that business that's liable, not you personally. So there's benefits to having your home under your business name. And as far as switching over, there is a clause in your mortgage. It is a little bit difficult because let's say you do a mortgage, a conventional under your personal name, but then you want to switch title later on. If the bank finds out, they can require you to pay your mortgage in full, because as it was initially done, it was under your personal name, not an entity. So that is a risk that you need to look into. But then at that point, you can always just refinance into an investment loan where it will allow you to hold title under an entity. That's usually what I recommend a client to do, as opposed to just switching title. I recommend refinancing into an investment loan where then you can do it and not get in trouble with the bank, and they won't require you to pay it up front.
Since you brought up refi, just want to talk a little bit about LTV, loan to value ratio. Can you talk a little bit about that in terms of generally how much equity you can pull out of your investment property as it relates to LTV?
So for cash out refinances, let's speak, for simplicities, like with conventional, you can only get 80% of the value of your property for a cash out. So for example, if the house is worth 100K, you can only get 80% of that, which is 80,000. And out of those 80,000, you have to pay your current loan. So for a cash out, that's the max you can do for, conventional. As you can always refinance, rate and term. If you ever want to change, the terms to your current loan, you can refinance with a higher LTV, let's say, 95, 90%. But in that case, because you don't have 20% equity, you will have private mortgage insurance, which is mortgage insurance, insurance that the bank basically requires until you get 20% equity on your home.
I'm glad you brought that up, because everyone is like, a lot of people ask, should your insurance and your taxes be bundled into your loan, into your mortgage, into your financing? And I personally forgot that you had to have at least 20% equity. So if you could just reiterate that point. And then I find personally it's much better to pay your taxes separately and to pay your insurance separately than to have it rolled into an escrow account. But obviously you need to have that equity piece first before you can do that.
So if you're buying, let's say 20% down, you would have the option. So if you're doing with 20% down, which is an 80% LTV, you have the option to remove your escrow account. Basically, what your escrow account is, it's an account that the bank creates that they collect monthly a portion of your property taxes and a portion of your hazard insurance. And they collect that monthly, and at the end of the year, when it's time to pay your annual renewal for your insurance or pay your property taxes, instead of paying out of pocket, it's paid from your escrow account that's created with the bank. That can only be removed when you have 20% equity on the property. Now, it depends on how you are. I feel like if you are good about your money and saving, I think it's worth it to not have an escrow account and just paying your taxes and your hazard insurance on your own, because your monthly payment is less. Whereas when you do have the escrow account, your monthly payment is higher because they're also collecting for taxes and insurance. But if you like the safety net, the security that I'm paying it monthly already and the bank is going to handle my escrow account for me, it's worth it. But if you feel like, okay, I mean, I can pay it on my own, I'm good about my money, I have my savings, like I can pay my taxes and my insurance on my own, that will lower your mortgage, or it'll only be principal and interest. So it depends on the person and how you are financially, disciplined or not.
Miriam, I felt like you might have had something to say, but maybe not. I thought I heard you like nodding or.
Oh, I had gotten a little call, but this is all interesting to me. I've always rolled it in, but I certainly am going to look at this. I don't know if I can change now to not having an escrow account, because that is an important thing to know as well. The mortgage payment goes up. You sign up, they're like, oh, it's $1,800 a month. You're like, great. And then next year it's 19, then 2000. It's like, and every single year it goes up, whether it's your insurance going up, even if you didn't file any claims, or the property taxes or whatever, it goes up. And, there's no avoiding that. And it is quite frustrating, because especially if it's an investment property, then your cash flow is going down unless you're raising the rent. And if you have good tenants, you don't want to raise the rent on them. You just want to keep those good tenants in there. So your cash flow ends up shrinking a little bit every year. So that's something to know.
Yeah, definitely look at it. So that's what I did with my first property after, I forget, like a couple of years. I literally was just like, I want to handle my taxes and my insurance on my own. They had me like write them. It was an FHA loan. I got enough equity into the property. And I just wrote to the different departments, and they were like, cool, see you later. And like literally I saw my mortgage drop by like $500 a month. And so then I would just paid my insurance in one fell swoop, right? And then I just paid my taxes in one fell swoop, and that was that.
Are they charging me a fee to maintain an escrow account? No? Okay.
No, but you could just look at it and see. I felt much better like with doing it that way, but totally. each their own.
Yeah. Notice your escrow account balance is over withdrawn. I'm like, what? How'd this happen? And the property taxes went up or something.
Yeah, so something like that. So, oh my God. Don't even get me started on property taxes. My year here in Florida, my property in New Jersey, the property tax has been pretty much like the same, but here in Florida, the property taxes have skyrocketed. So before I close out, because this is something that's come up quite a bit with a lot of friends of mine who are homeowners here in Florida, our HOA. Just in general, HOA fees. I think I'm a huge proponent of being an investor. I love my properties here in Florida, but I will say you have to really think about those HOA fees, special assessments that are coming up, the liens. I One thing I will say, and I'm putting it here, the Housing for All campaign, one of the things we will be doing is we're going to be putting policy out to make sure that there's true fiduciary oversight and responsibility of HOAs, because some of the things that I'm seeing are absolutely ridiculous. People's special assessments coming out $100,000, $200,000 that they have to get out of thin air. A lot of folks who live here in Florida are retirees, don't have that kind of income to just come up with. So, Kara, I am curious, since you have a lot of clients here in Florida, is this angsty? How are people feeling about the HOA piece of things?
I'm actually going through an issue right now with one. I have a client that we got under contract in August to purchase a condo. We were aware of a special assessment, but we were told that we can pay it monthly, which the client was fine, with. And these special assessments are obviously coming out because there's much more stricter regulations with associations, especially since Surfside, where, all these buildings need to pass their 40-year, 50-year recertification. So obviously, that's why all these assessments are coming out. But this client of mine, we were told we can pay it monthly. We get the estoppel from the association, and sorry, you have to pay it in full. How the hell is my client going to come up with $57,000 in addition to her purchase, for this association? It's like, how are you guys, as an association, how are you guys expecting these people to pay it in full? Oh, unfortunately, that's what the board of directors decided. So it's like, so what happens to the homeowners currently that don't have this money? Yeah. Unfortunately, we have to foreclose on them. It's like, that doesn't sound right. Like, how does it make sense? That makes no sense whatsoever, and that's what I'm currently dealing with. I'm sure there's many other cases, and it's getting out of hand. Like,
yeah, it is. So I'm wondering, and Miriam, looks like you had something to say, but I am wondering, are there opportunities for financing? Are there opportunities for investors to try to come in, just kind of like hard money loans? You might get a hard money loan or something for your HOA. I'm not saying that's necessarily the way to go, but it does feel like it could be a potential solution. Are you seeing that, Carol? And then Miriam, we can go to you.
I feel like property, like with all these assessments, property values, like condos everybody's going to be, so if you can't pay your assessment, everybody's going to try to sell their condo because it's like, I can't pay this. My only option is to sell. And if everybody starts selling in the building, they're in competition with one another. They're going to start dropping their prices, because if basically these units are almost all the same in a building. So it's like, if you drop your price, I'm going to have to drop my price. Investors are going to start coming in offering cash, and property values in condos, I feel, are going to go down in value. But Miami-Dade does have an assessment program, but only up to $50,000. So if you can get a loan with Miami-Dade County for your assessment for $50,000, and you can pay it within a time span of 40 years. But what happens to these assessments that are higher than that,
Yeah. Well, it's good to know that Miami-Dade has a little something, because I didn't even know that. So I will swing to you or maybe do some research to figure out where we can get more information. We'll put that in show notes.
I can send you the link. Yeah.
Oh, yeah. Perfect. Thanks, Carol. Yeah, please send me the link. Miriam?
Well, yeah, I know someone that this happened to personally. Kumar, we both know this person. I won't say their name, but that happened. And it was a situation where a business had come in and purchased a bunch of units in their condo building, and then started having seats on the board and changing and prices and things like that. So I stay away from these condos, these HOA fees, even the neighborhoods that have the houses with the HOA. I'm just not really interested in it. I'm kind of a person that, I don't enjoy rules and limits very much. So it's it's not for me, but certainly some people do like those homes. And they do offer a lot of benefits, but I stay away from those HOA ones for sure.
Yeah, I think that's a good point. And I guess this goes back to what both of you guys were saying, which is kind of know your strategy, know the information, know what could potentially happen. As much as I love having my properties in a condo building for lots of reasons, this is one of the negatives that definitely comes up that, cuts into my cash flow, that stresses me out sometimes around different things. On the other hand, I have seen the condo values keep going up, which is why my taxes keep going up. And so it keeps bringing up my net worth. And so like, there's a lot of other things that I start thinking about, but I think this is the point. As an entrepreneur, as someone who's thinking about real estate, really be mindful and intentional around what you think is your strategy. What's the ultimate reason why you're doing this? What's your why? What's your purpose? What's rooted in the work that you are doing? So Miriam, Carol, I want to thank you both so much. Before we go, any last words, and how can people keep in touch with you? I will also put this information in show notes afterwards.
Yeah, so with me, I'm big into Instagram. If anybody wants to reach out to me, Instagram, my handle is Caro, CARO_Lage, LAGE. On my Instagram, I also have a link. If you ever want to schedule a call, whether it be about real estate, mortgages, let's schedule it. And I'm an open book, obviously there's no fee to work with me. As far as getting information, like, let's chat. Like, I'm big into giving as much information as possible. So my Instagram, Caro_Lage.
Love that. Thanks so much, Carol. Miriam.
Thanks so much for putting this together. It's been great to chat more and share a little bit more about my story. If anyone wants to have a conversation about what they're going through or has questions additional for me, they can always reach out as well. I think the best way is just booking time directly on my calendar. I'm not the best with the social media as much anymore.
Perfect. So I'll make sure that we have Miriam's calendar link up under show notes so you guys can be in touch. Again, Miriam, Carol, really appreciate it. Y'all make sure that you support our Housing for All campaign. It is our belief that all Americans should have a safe, affordable place to stay. And most importantly, we believe in the American dream of homeownership. Owning property is so key. And so we're not gatekeeping this information. This is all about sharing education, knowledge sharing, and resources. So tune in next Wednesday when we will continue this conversation at noon on our YouTube or on our LinkedIn. Thank you both so much. Appreciate it. Peace. Bye.